You wake up one morning, check your phone, and silver, the metal, sitting in your drawer, in your jewelry box, in the solar panels on your neighbor's roof, has just hit $73 an ounce. Not $25, not $35, not even $50. $73. Markets are going crazy. Your phone is blowing up. Reddit threads are on fire. And every financial news anchor is scrambling to explain what just happened. But here's the thing. Most of them got it wrong. Because the $73 silver surge wasn't just some random market spike. It wasn't luck. It wasn't manipulation alone. And it certainly wasn't a coincidence. Today, we're going to break down exactly what caused silver's most dramatic price shift in recent memory. And more importantly, what it means for your money, for global markets, and for where silver is headed next. Stay with me, because by the end of this video, you're going to understand silver better than 99% of people watching the news right now. Let's get into it. Section 1. Setting the stage. Silver's history of being underestimated. Before we talk about $73, we need to talk about silver's identity crisis. Silver has always lived in gold's shadow. When gold moves, everyone notices. When silver moves, people shrugged. And that's been the biggest mistake investors have made for decades. Because here's what most people don't realize. Silver is not just a precious metal. It's an industrial metal. Gold sits in vaults. Gold hangs around necks. Gold does very little except look expensive. Silver is working every single day. It's inside your smartphone. It's in the wiring of electric vehicles. It's coating the surface of solar panels. It's used in water purification systems, in medical equipment, in semiconductors, in mirrors, in batteries. The Silver Institute has tracked for years how industrial demand accounts for more than 50% of total silver consumption globally. Think about that. More than half of all silver used in the world isn't worn as jewelry or stored as bullion. It's being consumed by industry. And here's the critical word, consumed. Unlike gold, which is mostly recycled and reused, industrial silver is often gone forever once it's used. It gets embedded into products too small and too complex to recover economically. So you have a metal that is quietly, relentlessly being eaten up by the global economy, and for years, its price didn't reflect that reality. That's the setup. That's the tension that had been building for years before $73. Now let's talk about what finally broke the dam. Section 2. The three forces that drove silver to $73. The $73 surge wasn't caused by one thing. It was caused by three powerful forces colliding at the same time. And when all three hit together, the market had no choice but to react. Force number 1. The green energy explosion. If you want to understand silver's price, you need to understand solar panels. A single solar panel contains roughly 20 grams of silver. That doesn't sound like much until you realize the world has been installing solar panels at a pace that would have seemed impossible just 10 years ago. Global solar capacity has been expanding by hundreds of gigawatts per year. Countries across Asia, Europe, the Middle East, and the Americas are racing to hit net zero targets. And every single solar panel in every single solar farm requires silver. On top of that, electric vehicles. The average EV uses significantly more silver than a traditional combustion engine car for electrical contacts, battery management systems, and onboard electronics. As governments pushed green energy mandates harder and harder, as subsidies poured in, as automakers committed to all-electric fleets, the demand for silver didn't just grow. It accelerated, and the silver market was not prepared for that acceleration. Force number 2. A supply crisis nobody was talking about. While demand was exploding on one side, supply was quietly struggling on the other. Silver mining is not easy. The majority of silver produced in the world, roughly 70 to 80%, doesn't come from dedicated silver mines. It comes as a byproduct of mining other metals like lead, zinc, and copper. That means silver supply is largely dependent on what's happening in those other metal markets. When copper miners slow down, silver production slows down with it. When zinc prices fall and mines reduce output, silver takes a hit too. In the years leading up to the $73 surge, several major silver-producing regions faced a combination of labor strikes, regulatory challenges, geopolitical instability, and rising production costs. Mexico, the world's largest silver-producing country, saw output disruptions. Peru, the second-largest producer, dealt with social unrest near key mining regions. At the same time, no major new silver deposits were being developed fast enough to compensate. The pipeline of new mines coming online was thin. The lead time from silver discovery to production can be a decade or more. So you had demand rising sharply on one end and supply struggling to keep up on the other. That gap had to close somewhere, and it closed in the price. Force number 3. The financial market awakening. Third force was the one that accelerated everything. Investor money. For years, silver was seen as the boring cousin of gold. But as inflation concerns grew, as currency devaluation fears spread globally, and as more analysts began publishing reports highlighting silver's industrial demand story, investors started paying attention. Institutional money began flowing into silver. Retail investors, many of them young and plugged into social media and financial communities online, started buying physical silver and silver stocks in large numbers. The futures market saw a surge in long positions. Options activity exploded. And as financial buyers piled in alongside the already stressed physical market, the price didn't just rise, it launched. When these three forces, the green energy demand surge, the supply crisis, and the financial market awakening, hit the market simultaneously, $73 wasn't just possible, it was, in hindsight, almost inevitable. Section 3 of the day it happened, what the market actually looked like. Let's talk about what the silver market actually looked like as the surge unfolded. In the weeks leading up to the peak, silver had already been climbing. But markets have a way of lulling people into complacency. A slow climb feels manageable. People assume there will be a pullback. They wait for a dip that doesn't come. Then momentum takes over. In commodity markets is a phenomenon well known to traders called a short squeeze. Here's how it works. When a large number of traders are betting that a price will fall, they sell short. They borrow silver contracts and sell them, expecting to buy them back cheaper later and pocket the difference. But when the price starts rising, instead of falling, those short sellers are in trouble. They need to buy back their positions to cut their losses. And when they all start buying at the same time, it adds enormous upward pressure to the price. That's exactly what happened in the silver market as prices climbed towards $73. Short sellers were getting squeezed. Every wave of buying triggered more forced buying. The market feeds on itself in those moments. Trading volumes surged. The bid-ask spread widened. Physical silver dealers reported shortages of coins and bars. Premiums, the amount buyers pay above the spot price, spiked dramatically, meaning the real cost of buying. Physical silver was even higher than the headline number suggested. And then, like all markets in extreme motion, it reached a peak. It breathed, and the conversation shifted from why is it going up to what does this mean? That's the question we actually need to answer. Section 4. What does $73 silver mean for markets? The $73 silver surge isn't just a number. It's a signal. And markets are full of signals that most people ignore until it's too late. Signal 1. The green energy transition is real, and it's expensive. The silver surge is a flash and warning light for policymakers and energy companies. The green transition cannot happen without silver. And if silver is at $73, the cost of solar panels goes up. The cost of EVs goes up. The cost of building out green infrastructure goes up. That has implications for energy policy, for inflation, and for the timelines governments have promised their citizens on climate commitments. Some of those timelines are going to need serious revisions unless silver supply can be dramatically expanded. Signal 2. Commodity markets are telling you something about the dollar when hard assets like silver surge in price. It often reflects something deeper, a loss of confidence in paper currency. Investors rush to things with intrinsic physical value when they're worried about inflation, about debt levels, about the stability of financial systems. The $73 surge, viewed through that lens, is not just about silver. It's a message from the market about the health of the broader monetary system. Signal 3. Supply chain vulnerabilities are not going away. The fact that a handful of producing countries hold such enormous influence over global silver supply is a strategic vulnerability that countries are now being forced to reckon with. Expect to see more investment in silver mining in politically stable regions. Expect to see more recycling technology developed to recover silver from industrial waste. Expect to see more research into silver substitutes for certain applications. None of these adjustments happen overnight, but the $73 surge has accelerated all of them. Section 5. Who wins and who loses? Every market event creates winners and losers. Let's be honest about both. The winners, silver miners, who were already producing, they saw profit margins explode overnight. Every ounce they pulled out of the ground was suddenly worth dramatically more than when they planned their budgets. Long-term silver investors, anyone who had been holding physical silver, silver ETFs or silver mining stocks for years, saw enormous gains on paper. Countries with significant silver reserves and production, their export revenues surged, their mining sectors boomed, and their currencies got a boost. The losers, industrial manufacturers who depend on silver as a raw material, electronics companies, solar panel producers, medical device makers, all saw their input costs spike dramatically. Those costs eventually get passed to consumers. Short sellers caught on the wrong side of the trade. Some funds took catastrophic losses as the price moved violently against their positions. Developing nations that import silver for manufacturing they faced sudden, severe cost pressures with very little ability to hedge or absorb the shock, and average consumers, indirectly, everyone pays. When production costs rise, prices rise. The $73 surge ripples through supply chains in ways that take months or years to fully show up at the retail level. So where does silver go from here? That's the billion-dollar question, and the honest answer is, nobody knows for certain. Markets never move in straight lines. There will be corrections, there will be periods of consolidation, but the structural forces that drove silver to $73, the green energy demand, the supply constraints, the monetary concerns, those don't disappear after a price peak. They evolve, they build, and they set the stage for whatever comes next. What I do know is this: silver is no longer a metal that serious investors and policymakers can afford to ignore. The $73 shift changed the conversation, and whether you're an investor, a business owner, a policymaker, or just someone trying to understand what's happening in the world, understanding silver means understanding the future. If this video helped you see the bigger picture, do me a favor, hit that like button, subscribe if you haven't already, and drop a comment below telling me what you think silver's price will be 1 year from now. I read every comment, and I'll see you in the next one.